Hi, it's Mike Lynch with AmeriFirst Financial, and it's time for your morning mortgage update for the week of June the 28th. Hope everybody had a great weekend. Gayle and I did. We got actually over to the coast for a few days. It was Gayle's birthday, and we enjoyed some wonderful, cool weather. Got a walk on the beach, and I just got out of the heat a little bit. But we're back, and what's happening in the market this week and what happened last week? Well, last week we expected some volatility and some possible rate increases floating into the end of the week because there was a big inflationary report that was expected on Friday. Well, it was a high report, showed that inflation is definitely going up, but it didn't reach the level of expectation. So actually, the market didn't react. We didn't see an increase in mortgage rates. And one of the things to keep in mind is when everybody has confidence in the economy, when jobs are there, when income's there, and things are going along just fine, and the consumer has confidence, money flows out of that bond market. And we know that mortgage-backed securities are traded in the bond market. When there's more trading, when money's flowing into that bond market, we see mortgage rates go down. On the other side of it, when that confidence is there, money flows out of the bond market, the safer bond market, into the riskier stock market in general, and we see mortgage rates go up. So we just didn't see the exodus of trading and money out of that bond market because the expectations weren't as high. The numbers weren't as high as the expectations. So what are we looking at this week? We're looking at our three things. A lot of jobs reports coming out. The Fed members talking about what they think the economy is doing, and then some non-jobs economic reports. And then there's some housing news that's come out today that it could have an impact. So let's talk about jobs. Big jobs week. A lot of jobs reports coming out, really trickling every single day, heading into the big jobs reports coming out Friday. And really what that's going to tell us is, are more jobs being added? Are fewer jobs being added? Are we going to hit the expectation? And if there's more jobs added and more income, then that could be good for the economy, or at least the expectation is it'll be good, and that could move rates up. So we'll be watching that. The second thing is the Fed. So the Fed meeting was a couple weeks ago, and the Fed members now just talk about what they think is happening in the economy in the different districts. And are they, well, we know economic numbers are good. We know that inflation is up. So all of this should be moving mortgage rates up. But the Fed has also said that, and we really don't care what's going to happen with inflation, which could drive rates up. We are going to keep buying mortgage-backed securities and keep these mortgage rates down to promote spending, to promote buying, until we really get a stronghold on the economy. So how are the other Fed members going to spin what's happening in the economy? And is inflation something they're concerned about, or do they think it's not going to really have a long-term impact on the economy and mortgage rates? We'll see. The third thing is domestic reports or non-jobs reports. A lot of those coming out this week. Yes, they could have some impact on mortgage rates. We don't really expect much of a change, but we'll be watching to see if anything is unusual or out of the expectation. The other thing, besides the weather heating up and the 115 degrees in Washington and Portland, I read something this morning, they're shutting all the schools and businesses down so people can be safe. Maybe it's a little more humid up there, I guess, but we keep going here in Northern California. But besides the heat going up, we're seeing increased prices going up, and those appreciation values just keep climbing and climbing and climbing. And how is that going to impact future buying? There's some talk about buyer fatigue, really trying to get those offers accepted, and most people are just getting rejected. So really a good opportunity to be proactive with your buyers and sellers. Just give them some insight that homes are still affordable, the rates are still fantastic. We're starting to see some inventory increase a little bit. So we might see maybe some of those buyers have an opportunity to get their offers accepted in a higher percentage. So we're looking this week to float into Friday's jobs report, obviously watching every day carefully. We do expect some high volatility floating into Friday with that jobs report. If you have any insight on today's report, please send me an email. I'd love to hear it. If you know somebody could benefit from this, please forward it to them. You can leave some comments down below. Have a wonderful rest of your week, and we'll talk to you next week. Bye-bye.